And live content provided at the event is for general information only, not intended to provide specific advice or recommendations for individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged, may not be invested into directly, and any economic forecast set forth in the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial.
Nice work, Amanda.
Thank you. I've already done that once this morning.
Yeah.
Had a little warm up.
We added the no fake, beware of fake news disclaimer today because we discovered last week with all of our technical difficulties, we provided some fake news and we took last week's webinar off our webpage. Hopefully 4 of you that were there that watched it will get the word. Generally speaking, when you look at an old newspaper, down on the early pages, it'll say corrections and amplifications. And then you go back a little bit further, there'll be pages right here that say opinions. And we always disclaim our opinions, but the correction was on our COVID report last week. We went back and looked at it and it was incorrect. And we will correct that as quickly as possible. It understated the likelihood of COVID versus other ailments. And so as soon as we get an update on that, we'll make it real to you guys.
Don't press end.
Hit the wrong one.
Give me the mouse.
Amanda, close off this thing.
I'm glad Amanda is close by today. You know, I'm operating off my kid's Mac. Do any of you guys know how to use a Mac? I struggle. You know, where does everything go on a Mac? So I've got the Mac going. I've got my work computer here going. So Amanda, I'm glad you're there to be in charge.
Well, I'm trying my best. You know, this is a new seat for me. I feel like I have more power here because
oh yeah,
this is where one of the boss men sits.
The boss man.
Yeah, there's lots of power there.
And I'm not sitting in my usual spot because, drum roll please, Arick Chrysilius is the newest team member of Gimbal Financial, and he's joining us on the call today. Welcome, Arick.
Thank you, thank you. I'm going to start out with a quick little joke. What did the ocean say to the beach? Nothing, it just waved.
Nice, nice.
Welcome to the Gimbal podcast. What do you think, Doug? Is he going to be able to fit in?
Yeah, that's a good joke. I'm going to be using that one later. I might use that all weekend. That's really that's good, clean fun right there.
Doug, what do you know about Arick?
Well, yeah, I am getting to know Arick. I've known who Arick is, and now I'm getting to know him more and more. And here's a few things that you need to know about Arick. The top number one thing is Arick owns a Fiero. I mean, how many people out there have owned a Fiero? And so Arick is a passionate person. If he finds something that he has interest in, he's going to go for it. And that's what I like most about Arick. And the Fiero is just, you know, that's just evidence of a passionate person right there going for it.
That's cool.
It's parked outside today, so if you guys are in the neighborhood, stop by and look at Arick's Fiero.
And always remember, rubbin's racing, so it's no big deal if you happen to scrape it a little bit.
Oh.
Arick, what's something top 2 or 3 most embarrassing things that have happened to you?
Putting me on the spot. Let me think about that one really quickly. That one, you should have let me know about that beforehand. I would have been a little bit more prepared.
We'll come back to you.
You can use this, since we took you by surprise, as one of your top 3.
Oh, there you go.
Nice.
Doug,
Kidding.
Doug, why are you not with us physically today?
Well, when you have a whole bunch of kids, you know, you welcome all types of opportunities into your life. And so the Shreves are on a COVID quarantine. And so, but we quarantine well. I mean, we do it with style. The kids, they've got their own workstations and offices set up. One of our boys, he took our playroom, converted it into his office. And the rule is, if you want to go into his office, you have to wear a tie. And so that's probably been the highlight of my week. Is every time I go upstairs, I put a tie on and roll up into his office. But yeah, we are quarantining, and you know what? It's not bad. It's kind of flashbacks to March and April of 2020, and really that was one of the sweetest times in my life. So we're doing well over here. Nobody's down and out.
And how's yours and Caroline's anxiety level with the kids and COVID being a potential there? Is
Well, you just look at the data. I mean, we look at the data, and I know you can make data say whatever you want it to say. I mean, you can get swamped by data and overrun by it. But you know, the way we look at it is, especially with the kids, you know, they've got this healthy, fresh immune system that's doing great things for their bodies, and so we really just aren't too concerned about it. They're not. They are definitely not too concerned. But yeah, with the kids, you know, thankfully there's no diabetes or other ailments that could be troublesome. I think with COVID, from what I hear and talk about with my friends and who are physicians and nurses, is it's guys like me who might be a little more overweight or out of shape or struggling with health issues. Well, that COVID, it can become a real deal. And so that overall, we're doing just fine.
You could include guys like me in that too, Doug. Those guys that have seen the calendar page flip a time or two.
Yeah, and you know, my friend Nick, he likes to remind me that I drive a desk for a living, and so it's hard to, you know, take care of yourself when you're driving a desk, because you have to compartmentalize and say, all right, I'm going to go get on the bike or run or do some push-ups, and you got to make yourself do this stuff, because we just sit around and we talk on the phone and we look at the computer screen all day.
I went for a run Tuesday. I don't know if I told you this, with an emergency room doctor friend of mine, and Tuesday, and I run probably every other week with him. And Tuesday I said, dude, you have lost some weight. And he looked really good. He's 35. And he said, yeah, I've lost 30 pounds. And really that was a result of his observation of what he sees at the hospital. He knew he needed to take better care of himself. So anyway, I'm glad cool. Your household is well. Yeah. Arick, we're coming back to you. Arick, do you have an answer for us, or are we moving onward?
I only have one for you. I try to block out most of these embarrassing moments, so I really had to dig deep trying to find one. The one that I came up with was when I was in college and I was given a tour of ISU's campus. And during the tour, you have to walk backwards a lot to be able to like speak to the prospective students. And when I was walking backwards, I ended up tripping, falling down, but getting up and playing it off all cool, but definitely in a little embarrassing moment for me.
Walking backwards. Doug, remember the first time we saw somebody walk backwards? That was pretty crazy, wasn't it?
Yeah, we were at the Pentagon, and Keith and I had the pleasure of having a private tour, and watching a guy walk backwards the whole, I don't know how many miles he must have walked, but it was pretty impressive.
Yeah, it was. Arick, we're going to let you go for this week, and we are thankful that you're part of the Gimbal team, and we're going to cover what's going on in the world now.
Perfect.
Great. Evaporated.
I felt like what's that Forrest Gump quote about Jenny? Like, and just like that, she was gone, or something like that. I don't know. Hey,
Doug,
what did you guys do? What did you guys do to the stock market these last few days? I mean, I leave for a couple of days, and look what happens. And what's going on with the stock market?
Well, let me share my page there.
It's not shareable.
I know, I'm getting there. I'm glad Amanda doesn't sit here every week. I like having her. She's not as forgiving as you, Doug.
Patience is one of the things I'm working on for sure.
All right, let's go and see what's going on. We'll start with the S&P 500. It looks like it's down a little bit today. We were talking last week, Doug, about the red and the green and the black lines, the 50-day moving average and 100-day, 200-day, and so on. And this is what happened last week that kind of put us in a little more cautionary mode, is that this drop below the 50-day moving average definitely caused us to make a few changes in some portfolios, take some money away from the market short term and see if it doesn't get some strength here. And it's reminiscent of over here, we gave up the 50-day moving average. Over here, we gave it up. And in 4 or 5 days, it regained it. The same thing over here, it regained it. And so we're giving it time to see if this regain right here is kind of a consistent thing, or if we need to make other changes. But that's this is pretty rough last few days. We had a little bit of a bounce back, but this day right here, we've talked about the volume before and how significant that is. That's like an election of what people are doing. That was Friday, which is called the triple witching hour, and there's a lot of funky stuff going on behind the scenes. So if you could ignore that line and just look at this one on Monday right here, Mondays was still very high relative to where we've been most of the summer here. So that wasn't a really good sign where the volume picked up. In technical terms, they call that a distribution day, where big people are selling things. And what we would prefer is over here where the buyers and these blue lines are coming in, that those lines would be higher. But that's the S&P. That kind of gives you a good sense. The NASDAQ really has a similar flavor to it. It's above it made its way back above it, and we're watching patiently to see what happens right there.
I think the lesson I've learned this week is anything starts with ever you should avoid. And so if there's anything out there that's ever go ahead and avoid that. And so this, Evergrande, this Chinese real estate play that's not looking so good for its investors and friends, that made the headlines. And who knows if that's the real reason why the market started to sell. The headlines are always looking for what is the reason, why are people selling. But at the end of the day, there was just more sellers than buyers on those big down days. And I say Evergrande because you remember the barge. Was the barge this year that stuck the was it the
Panama
I can't
Canal?
remember.
Suez.
The Suez Canal.
Oh, that's
I mean,
I think that was last year, wasn't it?
Was it
I
last
think
year?
it was. I think it was this year.
Oh, was it?
Yeah.
So anything ever, it's hard to name things, but you might not want to name your company ever something. Keith, are you going to look at the S&P 600? After this, let's look at the VIX if we can.
Yeah, the S&P 600 has, we've been talking about that the smaller companies haven't been participating. They've been trending downward. This line here tells you relative to the S&P 500, how has this been doing? And it's just been weaker.
Yeah.
But really, these last 4 or 5 days in a downward market, it's shown a little more oomph than some of the others have. But I don't, it's still got this glass ceiling up here a little bit above it. We'll have to watch and see what happens with it. That's the smaller companies out there, which are bigger than, Gimbal Financial and things like that. They're just lesser known companies that are still very large.
Well, early in my training days, and I'm sure for you too, you go back and you look at all the history of performance reports and what asset class performs the best over the longest period of time. And a lot of time it's those small caps. They're tough. They're tough to hold on to. They're tough to participate in. But a lot of times it's those small caps that end up doing really well. So we like to have those in your portfolios. We like to have growth small caps. We like to have some small caps that are a little more stable. But even when they're going sideways, that's not a bad thing.
Well, the volatility, this is the VIX. It's a measure of the volatility of options in the S&P 500. marketplace to tell you when things seem to be picking up. And we had got down, we're bouncing off this 15 level for most of the summer. And we've had a few spikes up to the 25 level, including this week. And it's still in that kind of 15 to 25 range. We, if I change the date on this to 2020, change.
I didn't see the change. Probably even just go out to the weekly.
Yeah.
Surprisingly, I don't think you have Wi-Fi right now.
Oh,
Can you still see us though, Doug?
Yeah, I still see it. So
Okay.
we're looking.
yeah. Well,
It should be back now. Try it now.
There
oh, there we go.
Oh,
There we go. Hopefully all of our fans out there didn't lose us for a split second or two there. We're back. This was the COVID scare. This thing jumped all the way up to 85, which I think is unprecedented.
I was scared. When it did that, I thought, oh my gosh, what is going on here? I mean, during that time, we had moved to a lot of cash in 3 different selling instances. But oh my goodness, I remember when it jumped like that. It's like, what is going on here? I mean, I was leaving my grocery bags out in the garage overnight so that no fumes would come off them into our house back then too. It was just crazy. That was a crazy time.
Yeah. Yeah.
And
So
today,
we're
like
much better off.
when you look at it today, I'll just tell you this. I mean, we went in, the boys and I went in to get COVID tested this week. And when that thing peaked out at 85, we had taken a kid to get COVID tested outside, and a dude came out in like a hazmat suit to test one of our boys. And so, today, or last week when we had our testing, there were no gloves. The nurses, they just welcomed us in. It was nice doing business with them. And so when that spike really happened, the whole world was just totally on alert, unsure what things were going to look like. Whereas today, even our spike here recently, that's just kind of normal. That stuff just happens.
Yeah. And you can see that uncertainty is definitely not something the market likes that much, particularly that was kind of unprecedented things. I don't know that you can say that the US government has acted the way they did ever. I'll keep my political or opinions to myself, but the range here prior to that was in the 12 to 20 range, and then it spiked up. And then if we go back to today, you can see how this thing is still much more volatile than it was pre-COVID. We're in the 15 to 25 versus the 10 to 20 range. So
hey, Keith, will you change the date and go back to like say 10/1 2018? If you can do that.
I went back. Do you see it?
Okay, there we go. And so, in 2018, towards the end of, or the fourth quarter of 2018.
Oh, so I'll go to 19 here. Is this what you're talking about over here, Doug?
There we go. Yeah, there we go. Yeah, we were kind of cruising right along, and then all of a sudden, boom, the volatility started to increase again. And so those are the types of things that we're looking out for, where we might reduce risk exposure in someone's account when we see that volatility really pick up and we start to move through those major moving averages that we talk about each week on the here, like on the S&P 500 or on the NASDAQ.
Yeah.
Yeah, there we go.
Well, let me go to 19. Yeah, so this is, where is it? I'm not seeing what I was looking for on there. I thought this would show you the spike of this. This is irrelevant to you guys. You probably don't like my chart there, but what I was trying to show is when that volatility picked up over here in the fourth quarter of, what was that, 2018, you had almost a 20% drop in the S&P 500. That'll make you catch your breath.
I mean, it was like 3 weeks of selling into January.
Yeah.
And then by that fourth week, and the first week of February, things started, they did it again. They V'd up. They just rapid recovery back up. And so that even there, that's not normal. We've seen several different types of rapid recoveries. They call them buy the dips. And I'm even hearing that today when I hear about the sell-off in the last week or so, is people are buying the dips again. And that's not always a recipe for success.
No, it's not. We believe in a long-term perspective, but you don't always need to buy and hold something. I was going to show, I marked up a trade that we did earlier this year, Doug, and we came into this stock right here on April the 12th. This is FedEx.
That was looking beautiful right there, by the way.
Historical data too.
I mean,
yeah, this is historical
looking
data. This is not a recommendation. We're just showing something that happened and explaining
if you
our
could
thought
put
process.
if you could put your hand over the right side of that chart before you know what happens, man, it's a really nice setup. You had good volume coming in from the buyers, nice and tight prices.
Yeah, and so when we try to buy a stock, our goal is to make money, right? Like that's
right.
That is the goal. And so we gave this thing a little bit of room right after we bought it right here, and then it did what we were expecting. It started going up, and that's exactly what we expected. If we were perfect stock investors, we'd have sold up here. We didn't. Then we started seeing all these red lines. We saw high volume coming in, and we didn't want to lose money on a trade that we've had for almost a quarter that just wasn't doing what we expected. It was underperforming what was going on in the market. And so we took a loss, a very small loss here, just a few, it's a little over 2 months. We took a loss on that trade. And from the price level right here to where this stock is today, that is a 19% drop. That's a bad day.
Yeah, and you know, it's when you have a stock or any investment, it can be tough to take a loss. It can be difficult to say, you know what, I think I'm out of this. I made a mistake. The market doesn't like it as much as I thought they would. But it's okay because there are more stocks in the sea, and there are more ETFs, there are more investments out there. There's always another day that you can participate in.
Yeah, and so the math behind this, for those of you who wonder why we might do a transaction like that, is this: if we lost 1%, which I don't think we did on this, but suppose we did, to just break even, the next transaction we have to do 1.1%. Okay, that's all it takes to get our money back. And so we live to play another day, or to invest another day. From right here, like I said, this is about a 19-20% drop. It's going to be a 23 or 24% gain just to break even. And those don't come along every day. So for us to admit we were wrong quicker, make a decision, act on it, even though we have to acknowledge to everybody that what we didn't work out how we thought, we think that's better for your capital, that we're acting on your behalf to preserve your capital when things aren't going how we thought they would.
I just looked at the records, and you know, everybody's a little different, but it was way less than 1% loss.
Yeah, well, and it was just there's no crystal balls. We just saw things happening there that we didn't think were proper, and so that's different than buy and hold. There's probably, you know, we could probably have bought and held on to this, but we would have, your accounts would delay recovering from that for quite a while. I don't think you'll see this back up at that level. We can check back on this in 6 months and see where we're at, but that's a thought process to keep in mind.
In this thought process too, I mean, you know, there have been times this year where we've held a lot of cash. I mean, more cash than we've held really ever in my 20 years with Gimbal. And, in doing so, there's times where you look at a chart like this and it's better to hold cash. I know it can be painful at times, but it's better to hold cash than to hold this stock. And
Well, you still have risk, right?
That's right. And so there's when we look at the sea of stocks, and Keith didn't do it today, but we've been doing this routinely, is there are several stocks that are under the 50-day moving average, several stocks within the stock universe that just don't look that attractive. And so that tells us there's increased risk out there.
Well, I was just giving you an example. This stock right here, is my screen still sharing with you?
Yeah, we're looking at Boeing from 2017.
Yeah, this stock was one of the rock star stocks. Like, we could buy this and hold it, was the thought process. And then they started having problems, right? With their airplanes, and look how well that had done. And then if we spring up until today, go back to today, this it was more rich. This is when they had the problems with the planes right here. You're at a $350-ish level, and let's see what this thing dropped to on this. It dropped to 89, and it might get back to this threshold, but you literally lost all that money during that time, and your money just has sat idle. And so that's just some examples of what we're trying to do on your behalf, to have your capital at risk, but not to absorb risk that's just difficult to recover from.
With a few minutes left, it's interesting. Arick and I were talking about risk that clients have and liabilities that clients have. And one of the major liabilities that we all have, if you have a retirement account, one of your major liabilities is one that is rarely addressed, and that's taxes. When you look at, hey, my 401k, let's say my 401k is $100,000. Well, you might have 25 grand worth of taxes in that because it's never been taxed. And so this is a topic that's just getting traction. I noticed on Facebook, I got a nice note from President Biden saying, hey, folks, listen, we're all for you guys making money, but the rich people aren't paying enough. And so, that's based on capital investments. And so this is going to be a continued theme, an increasing theme, I think, for us in the next few years, is just taking a look at your tax situation, taking an honest look at the 401ks or your IRAs and saying, look, don't forget you have this liability. And the beauty of it is you have some influence with that liability. If you took it all out this year, yes, it puts you up into a really high tax bracket. But if you spread it out over time, you can smooth out the ride a little bit. So taxes are real popular in the news right now. Don't need to be afraid of it, but it's also a good time to meet with us, meet with your accountant, maybe the three of us, and get together and get a game plan for not only 2021, but 22 and 23.
Good thought.
Back in the 1980s, Doug, a client called the investment office and asked for their advisor, and the assistant who answered the phone, she had her phone, old school phone, and was like, "I'm sorry, I hate to tell you that he passed away." And the fellow said, "Oh, okay," hung up. The next day, he calls again to the office. The assistant answers the phone, and she's like, no, sir, I'm sorry to tell you that he passed away." He goes, "Oh, okay." So he calls back the third day, and the assistant now has lost her patience with this client, and he asked, speak to the advisor, and she says, "Sir, he's passed away. You've called every day this week. I've told you the same story every week. Is there a problem that you don't believe me?" And she said, "No, he said, "No, I just like to hear you say it." And that's the nature of how people feel sometimes going through down markets. And that joke came to light after the 1987 market. But our goal is to put a smile on your faces. Maybe we can trump Arick's waving at you the next time with our jokes. So. Anything else?
Great.
Hang in there, everybody. We're
We'll
gonna
see you
make it.
next week.
Thank you.